So for those of you who haven't met me before, I'm Cynthia Rowland. I am the Exempt Orgs Practice Area Leader at Farella. I've had a wonderful time over the last 30 years practicing in the area of exempt organizations, charitable planning law, and this, while the title of this slide would seem like it's not a big topic for nonprofits, it actually is somewhat bigger than I had expected early in my career. There's almost always one of these three areas of investigations, audits, or subpoenas on my desk that I have to deal with. But before I turn to the other speakers to let them introduce themselves, I just want to mention a couple of things. We offer these seminars at a really good price. The only thing we ask is your honest feedback and evaluations. It really helps to know what we do that works and what we do that doesn't, and also any future topics that you would like to have discussed in this kind of a format. Our tentative spring slate include a seminar on hot topics for nonprofits. I'll probably do that early in the year because it looks like we may have new federal legislation, and there's certainly going to be state legislation. So there'll be some hot new stuff for nonprofits in the first quarter of 22. And then we'll probably also do an update on employment laws of special interest to nonprofits, and hopefully also real estate for nonprofits as both landlords and tenants. Our nonprofits sit on both sides of those kinds of agreements. So that's a little teaser for next year. And as Margaret said, if you want to be sure to get the invitation directly, let us know where to what the best address is for contacting you. Continuing education credit is available for lawyers and accountants, and we'll follow up with that afterwards. So that's the basic overview. I want to have Aviva and Stephanie introduce themselves so you'll understand our different perspectives. This is a really cool panel because we all come at this from a different area of expertise, and then we'll go into the agenda.
Sure, thanks, Cynthia. I'll go first. Hi, everyone. I'm Aviva Gilbert. I'm not quite as experienced as Cynthia. I'm only a decade into this practice, but my practice is corporate internal investigations that has included, but it's not limited to, exempt organizations. I also have a criminal defense practice. Those areas kind of go together. Most of my work involves either figuring out what happened in a challenging situation and or dealing with the government kind of broadly construed, DOJ, AG's office, FBI, all the alphabet soup is how I often describe it to people of agencies. And the issues that we've investigated just really run the gamut. We'll talk about some examples later. But I've worked on a couple of investigations with Stephanie Fauerbach, who's joining us from the accounting side of the house as well.
Hi, I'm Stephanie Fauerbach, and I actually split the difference. So I've been in this 2 decades. I spent the first decade of my career actually at a Big Four accounting firm. So I come to the forensic accounting practice as being a previous auditor. And then most recently, I'm a managing director at FTI and their forensic litigation consulting practice, which, as Aviva mentioned, we get brought in on certain investigations, mainly when there is an accounting risk.
Okay, so let's launch right into the agenda. Margaret, can you go to the next slide? So here's what we're going to cover. All three of us will talk a little bit about types of misconduct that nonprofit organizations often have to deal with. Some is the same as anybody else, any other business, and some is a little bit different. We'll talk a little bit about how these investigations originate, because I think it's important to understand how these things come about to get to how one deals with them. We'll talk about the initial response and the questions that come up when the audit letter lands on your desk or the investigator calls. We'll talk about it at a good deal of length. When to call the various experts. You don't necessarily need all three of us, but you may need even more experts depending on what's going on. what to do during the investigation. We'll talk about that. And then a super fun area is when your nonprofit is dragged into someone else's drama. So we'll talk about those situations. And then preventative medicine, best practices, how to, presumably some of you may have ongoing investigations. Hopefully you're all just interested in this topic because you want to be prepared. And so we'll talk a little bit about how to be prepared and how to position the organization, if not to eliminate, because I don't think any of us can prevent some of these things from happening, but sometimes you can do a lot to make it less painful. And then, as Margaret said, when we conclude the program, we'll open it up for Q&A, and those who want to stick around and have specific questions answered, we're happy to do that. When we were live at Farella, this would also be done over wine and cheese. And so I'm really sorry if any of you were hoping that we were also going to be able to do this live this time, but hopefully by next spring, we'll be back in the office and be able to have our Q&A and some refreshments as well. So with that, let's launch right into the various types of misconduct. The thing that makes nonprofits different in these investigations is that they have, in the Internal Revenue Code based investigations are not just income tax compliance, but there's so much in nonprofit law that's proscriptive and that prohibits certain kinds of behavior that can be the subject of an investigation, alongside failure to pay tax and other ordinary tax issues that a for-profit would face. So, for example, political activity could be the subject of an investigation. Insider transactions, excessive compensation, those sorts of tax problems can generate significant issues, even if it doesn't cause the IRS to come calling. Those kinds of issues can cause the relevant Attorney General's office to look into the organization as well. And then there's also charitable solicitation laws. Violating those rules can generate another kind of investigation. Aviva, do you have some thoughts on financial and fiscal misconduct and any other things that often hit your desk?
My desk, yeah, I would say the types of investigations that often hit my desk are not actually necessarily unique to nonprofit organizations, though of course nonprofit organizations could suffer the same kinds of issues. Theft, we did an investigation actually for a nonprofit entity a couple of years ago of valuable materials theft. Their electricians had been siphoning copper from the organization's facilities. That was an interesting one. I would say less typical. Embezzlement, more direct financial theft, that could be as straightforward as somebody who works for the organization taking the money. It could also be structuring transfers to a family member. That's something we've encountered in the past, or a vendor that is belongs to the employee in some way. I'll let Stephanie talk in a second about various kinds of accounting misconduct, but I would say vendor relationships is a key one, especially for large organizations. It's often a hidden problem. There might be some kind of kickback going on. We recently dealt with one in which the real estate broker was allegedly paying kickbacks to an employee of a large organization. And then on the employment practices front, that's another one where the issues that you see in a for-profit entity are frankly quite similar. Nonprofit organizations are not exempt from allegations of harassment or discrimination or kind of bad behavior by executives or directors. That often, those can be standalone investigations, but I would say more commonly what we're seeing now, at least in my practice, is combinations of these things. Allegations about improper vendor relationships. Oh, and by the way, this person also harassed this other person who works for the organization. And I would say it's quite common now that we end up spending a fair amount of time, which we'll talk about shortly, kind of scoping and thinking about what we are actually looking to determine, because there's so many different kinds of issues that can be at play at once. I don't know if Stephanie did any comments on the accounting front, but
I mean, I think
I would say overview.
yeah, I would echo what you say. I mean, whether you're for profit or nonprofit, as it comes to accounting, you aren't going to encounter the same types of things. There was actually a report that came out in 2020 by the Association of Certified Fraud Examiners, which was the report to the nation, a global study on occupational fraud and abuse. And for nonprofits specifically, the top accounting type frauds were corruption, billing fraud, expense reimbursement fraud, and then if you have cash on hand, just the physical, the theft of that.
And that reminds me of a really important point here. For a lot of for-profit businesses, if embezzlement and theft is apparent, leaving aside public companies, which is a whole other area, but nonprofits, particularly in California, I don't know if this is true in other states as well, but nonprofits that are required to be registered with the Registry of Charitable Trusts in California, which is a division of the Attorney General's office, they're required to file a form RRF1, and that form specifically asks if there's been theft or embezzlement. So where in some circumstances, a for-profit business can just look the other way and say, look, we lost the money. We do or don't have insurance. We fired the person. We've moved on. We don't want to spend a whole lot of resources investigating. For nonprofits in California that are required to report, they have to do an investigation. There's really not an option to not find out what happened to the resources and to try to recover it. So with that,
I was just going to say, and another statistic that was interesting I found from the study was that most frauds are actually going on for about 14 months before they come to light. So, by the time someone even covers it, there's a significant time that's passed.
Next slide. Thanks, Margaret. So focusing a little bit on the regulator, the government investigation, those can be triggered by the compliance reports, by the RRF1, as I mentioned, with the AG's office, or the 990 with the IRS. And while there's, it's fairly common knowledge that the IRS isn't doing a whole lot of audits, they do audit nonprofits, and the 990 is a public document, and there's a whistleblower mechanism with the IRS that allows people to bring to the IRS's attention, failures in just by looking at the 990 at the publicly filed tax return. I'm sorry, the publicly disclosed tax return. Failure to file often can also trigger the IRS and occasionally the Franchise Tax Board to start an investigation. And then the as I alluded to, the most, I don't know if it's most common, but a common trigger is the disgruntled individual actor, whether it's a current or former employee, beneficiaries, the charitable class of the organization, sometimes the stakeholders, people who are just not happy with the direction that the organization is going. Board members have been known, when they're not listened to raise the issues with an investigator, with the IRS, or more commonly the Attorney General's office. And then the government itself can start its own investigation.
I think that's really important. The last point, the government can start its own investigation. There's no kind of monopoly on who can contact the government, right? Any of the aforementioned groups could, or as a group, could get together and contact either the sort of local, state, or federal government if it was a big enough issue. It's not to say that would necessarily make the feds interested in it, but certainly that's always a risk.
So let's talk a little bit about internal reporters, the whistleblowers. The internal reporters that are, typically they're very unhappy, and it doesn't usually come as a surprise to the organization if they find out who it was. But the complaints can certainly be made anonymously. In California, the Attorney General's website has a really easy mechanism for complaints to be filed. So a disgruntled person with a few clicks on their keyboard can file a complaint. Sometimes the reports are made to management, and this will get into best practices, but it doesn't always go straight to the regulators. Sometimes the complaints come up in a different direction, and if caught there or attended to, they may be more manageable. Reports to the board, sometimes calls to the auditor, the accountant, or even the lawyer. I've been contacted from time to time over these past decades with someone who just wants to raise the profile of an issue, and they feel like they're not getting enough attention by talking directly to management. And then reports to HR in the employment context.
Yeah, I would say reports to HR in the employment or in the sort of suspicion of other types of misconduct context as well. We've seen a few examples recently where an employee, not even a disgruntled employee, has reported concerns about, kickbacks or something like that, or, improper expense reporting via whatever HR reporting mechanism is available at that organization. I would also say it's been we've seen an increase in calls to accountants directly. We had an issue earlier this year, actually, where an employee, in good faith, not in a disgruntled manner, contacted the organization's accountant because they felt that they weren't getting internal traction regarding some concerns that they were raising. So I would say the last two are certainly pretty common in my world, at least.
I mean, the other one I would add is if an organization does have an internal audit department, sometimes things will bubble up through that, that review process. But this AFC report said for nonprofits, about 40% were coming through some sort of employee reporting mechanism. And that, not surprisingly, the more formal, the fraud awareness training is within an organization, the more likely they are to report through that, formal whistleblower channel.
Which is very attractive as compared to calling the government, in my view, at least.
So I'll turn it over now to Aviva now to lead on the next few slides about, so what are you supposed to do? What I usually do is I call Aviva. There's more to it than that.
Good place to start. I'm actually going to take these a little bit out of order as I was thinking about it. I think the why so many lawyers question is a good one and an important one. And I think the answer is fairly straightforward, which is different lawyers do different things. I'm not a tax lawyer. I don't have expertise on those types of issues, but have a lot of investigatory expertise. So if you're trying to figure out what happened, that's one kind of lawyer you might want to call. Often, if there is an HR or executive misconduct issue baked in, it makes a lot of sense to have somebody with employment expertise who can tell you if particular conduct meets the legal threshold for a hostile work environment or something to that effect. That's just something that is specialized in our business, at least. And then it's not only why so many lawyers, but also why so many lawyers and experts. And it just depends on the breadth and or the depth of the issue. How many different things are we looking at? What issues are we looking at? And how deeply do we need to go? What do we do about documents? Also a very important initial question. The big takeaway is you have to suspend any deletion that is happening. If you have a system that is taking the organization's email and kind of purging every, when something is 6 months old, that's quite common and defensible. But if you have an allegation that something might have gone wrong and there might be some evidence in email, you need to suspend any auto deletion policies. Hard copy documents, it's sort of the same thing, but every organization is different in terms of how they retain materials. But talking to somebody who can help you work through where the documents are and what we need to do to protect them. That's kind of the key question. How do we protect them and make sure that nothing is being deleted? That can also involve sending out, it's not really a litigation hold, but it's sort of like a notice saying, you're on notice that we don't want you to delete anything to employees who are in a area of the organization that might be affected. And then I wanted to talk about the confidentiality issues along with who is the client, because I think those are really interrelated. So there's also no one answer to who is the client, but typically the board of directors and sort of leadership of an organization is going to be the client, as opposed to an executive director or any sort of single individual. And the client is the entity, and the entity is run through its board. And that is very important because that is what establishes where the attorney-client privilege runs. So the privilege runs between the counsel and the client. And that means that, let's say the head of the organization, the executive director, is under suspicion or is being investigated. It's very important that that person know that investigating counsel does not represent them as an individual. Counsel represents the entity. This is something that we deal with very commonly. And it's also important because the client, the board or the committee of the board, which I'll talk about in a second, is going to ultimately hear the recommendations and remediation ideas to the extent those come up and make decisions about them. And also, in some cases, make decisions to waive the attorney-client privilege if that is appropriate. Like if there's a decision that the entity wants to communicate to the government, for example, what occurred, and thinks there's going to be a benefit to doing that, that decision needs to be made by the governance, by the client itself, and that is generally the board. In terms of, so what are the confidentiality issues that come up? Get a lot of questions of, is an interview in an investigation confidential? And the answer to that is, it's privileged and confidential, but that privilege runs between the lawyer and the client. And so if an employee tells me something in the course of an interview, that doesn't mean that I will not tell the board of directors or my client that information. You can make decisions about how to anonymize that and how to package it in a way that encourages candor, but being very clear about who is represented, who's running the investigation, and who controls the flow of information and its confidential nature is really important. In terms of who needs separate counsel, we often get questions about, do I need a lawyer to have this conversation from, let's say, an individual employee of an organization. So the entity's counsel cannot advise a specific employee on whether they need a lawyer or not. That's not appropriate. But if an employee feels that they do need separate counsel, they can make that request, and that's something that the client can determine whether they want to offer or not. There are certainly strategic reasons not to offer to pay for or retain counsel for every individual employee. It can be very expensive, and it may not encourage the most candid discussions. Now, one way that we've seen that is very helpful to remedy that is to create what's called a pool counsel role, in which one lawyer, one law firm will represent a number of employees, and they can benefit from that collective representation. It makes things run more smoothly. It makes it a lot easier to schedule interviews, to conduct those interviews when you're dealing with just one counterparty. And it also makes those employees feel protected because their interests are being represented by that pool counsel. So that's something we've seen really grow quite a bit in the last few years. I think the other thing to think about in the context of separate counsel, if there's a real regulatory risk and it seems like an individual executive may be under pretty significant, I don't want to say suspicion, but be involved in some of the, or implicated in some of the questions that are being asked, it can be wise to get that individual separate counsel as a means of protecting the organization and making sure that any interactions that that individual has, particularly with the government, are done through counsel. I always recommend that if the entity decides to get separate counsel for a senior executive, that they do that subject to an undertaking. That means that if there's later a determination that that person has committed some kind of misconduct, that they would be obligated to return any money spent on their counsel. It's a best practice. It makes a lot of sense. You don't want to have the organization be on the hook for paying for the lawyer of somebody who defrauded or committed some other kind of misconduct. What else? Oh, who will oversee the investigation from the organization's perspective? Our experience has been that even though the board is the client, it's unwieldy to have investigators or counsel that's working on investigation be reporting out to the entirety of the board. It's often just too many people, and it's not practical. So we found that it makes most sense for the board to delegate oversight to a special committee that is set up for the purposes of this investigation. And it can, could be 1 to however many board members, but that strikes the right balance between making sure that the board is hearing what's going on and not encumbering the process by having too many kind of cooks in the kitchen. That's my take on that.
A couple of points on that I've seen played out. To be really specific, Aviva said this, but I'm going to drill down on it a little bit. The client is, when we're talking about this now, the client is the nonprofit entity. And there's kind of different flavors if your nonprofit is formed as a trust and not a corporation. But for this discussion, we're talking about nonprofit corporations. And that organization is governed by and under direction of the board as a group, not a particular board member. The chair doesn't, the chair of the board isn't the only person who makes decisions. The board can only act as a collection. And so in really difficult situations, and sometimes just for convenience, even if it's not terribly difficult, the best thing to do is for the board to appoint a committee. Sometimes it's a standing committee. I mean, there are standing committees that are delegated the duty to respond to whistleblower complaints, as an example. So a committee may be responsible for overseeing the investigation, but they're ultimately subject to the oversight of the entire board. And having the committee from the beginning can be really helpful in protecting the candor and the anonymity and the good flow of information that Aviva was talking about. But some of these investigations can be very polarizing at the board. And it does occasionally happen that board members want to be able to talk about the issues with their own counsel. So sometimes board members who either they may just want, for whatever reason, to have their own separate conversation with their legal counsel about what they're being asked to pass on or to deal with as a member of the board. In really difficult situations, that adds even more lawyers to the mix. They may not be, and they're the director who has his or her own counsel still has their duty of confidentiality vis-a-vis the organization board conversations and the investigation information as well. So it can get pretty complicated to have information flowing in the right ways and have everybody feel like they're being protected.
I strongly agree with that. I was just going to yet a further layer of complication, which is something that we've seen. Cynthia and I actually are dealing with this right now in an investigation where former employees have very meaningful information about the allegations of misconduct that occurred. That adds a separate layer of complication because they're not subject to the kind of same terms of employment as current employees of the organization are, but that doesn't mean that you wouldn't talk to them. Sometimes you may make a decision that you don't want to because the risk is too great, the confidentiality risk is too great. But that's a separate layer to consider. And I definitely would not rule out speaking with former employees if they have meaningful information. Okay, so our report came in one of the many myriad ways that it could come in. And we thought it might make sense to just at a high level kind of talk about what might happen next and what the course of an investigation might look like, with the caveat that it will vary significantly based on complexity, the organization itself, the specifics of what is alleged. But the first thing to do is to work with whoever's conducting the investigation to scope the issues and to make sure that everybody, and by everybody, I mean the client, so the, let's say, committee of the board, knows what is being asked and what we're trying to answer. And that can be an iterative process. You might work to figure out, how broad you want to be. We've often get a lot of, well, while you're looking at this, why don't you also take a look at this? That's, I would say, pretty standard, but making sure that everybody's on board up front with what questions are we trying to answer. That's kind of step one. And then related to that is making a determination of what documents need to be reviewed, if any. Some investigations are very document intensive, whether it's email, text message or other instant messaging, or various types of accounting databases. I guess, I don't know if you call those documents, Stephanie, I probably would.
Reasonable.
Record review. We've also had investigations where there aren't any documents that need to be looked at. Often in kind of HR, this person has been saying things that were problematic. That's not necessarily the kind of thing that you're going to see in documents. Same with kickbacks. It's rare that you'd find an email where somebody says, like, meet me out back so you can give me the cash that you promised me. But in many, the document review is significant, especially if it's something that is a little bit more financial, I would say, or fiscal issues. So making determinations about the document review is important up front, especially because the document review phase heavily informs the interview phase. Most investigations are largely driven by interviews with relevant parties. Sometimes former employees, usually current employees and or board members of the organization. And it's certainly preferable to have the documents reviewed before you speak with people so that you can ask them about any issues that you saw in the documents. Then I've put it in bold because it's so important. If there's specialized expertise that's needed, you could call in experts really at any point, but I would say sometime in the first quarter of an investigation so that they can be brought up to speed and so that their expertise can also be used to inform interviews. And often, so Stephanie and I had an experience this summer in an investigation where we did a number of the interviews of people in the CFO's office together, because I don't have the financial expertise, she does, I have the interview expertise, so we would partner on those types of interviews. I put in a bullet point here on updating the government. I don't know what your experience has been with that, Cynthia. It's a complicated strategic question, pretty significantly in my world, because speaking with the government is okay, but if you share what would otherwise be privileged information, let's say like an interview memo, something like that, that waives the privilege if you talk to the government. There's no sort of exception to the attorney-client privilege for conversations with the government, which I would say is somewhat of a misconception. So being very careful about the level of information that's provided and making sure that any updates that are given aren't unintentionally privilege waivers is a key thing to think about. And then after the interview portion, any expert analysis that's conducted, there's going to be a period of just sort of determining what both the factual conclusions are. So did this happen? Is it more likely than not that this occurred? We substantiated this allegation. We didn't substantiate that allegation. I would call those kind of factual conclusions. That's one piece of it. And then the related piece is, okay, so we have these conclusions. What do we need to do? What are the remediations, both to fix something that already went wrong and to prevent it, hopefully, from happening again? So I would call that the kind of controls, remedial measures, step of the investigation, and the factual as well as the remedial pieces are generally then reported to the board. I would say typically first to the committee that's overseeing the investigation, but often we'll give an opportunity to the full board to hear the results of the investigation as well. And that is something that the committee can generally shepherd, but that's kind of the life cycle, I would say. I don't know, Cynthia, if there's a sort of Attorney General's office originated investigation, how does that fit into this kind of life cycle?
Yeah, I think something generated by the AG's office, we would, ultimately there's the reporting back to them is very, carefully thought through in trying to, maintain good relations and answer the questions and be responsive to whatever's asked. But there's definitely a careful consideration of what's described. But often you don't have a choice. You have to answer the question.
Yeah. One other thing I was thinking about, because we often get a lot of questions up front. Okay, what's the ultimate report going to look like? Which of course is difficult to answer on the front end. But one thing that we consider very carefully is whether we want to do anything in writing, any written report. And there's reasons pro, reasons con. I would say I generally come out against recommending a written report. There's not a real benefit to it. And what's important is that the organization understand what the factual findings were and what the remedial steps that need to be taken are. So those we often will submit in more of a memo form. But chronicling what everybody said and what those conclusions are is often not helpful to the organization.
Yeah, and we may have that as our own attorney work product. We've kept it in our files. It just doesn't necessarily go out. But back to the report to the government and back to my earlier reference to the annual report, the RRF1. There's information that must be provided in that report, and it's the report is due when the tax returns are due, which is often, it's 9 months or up to 11 months after the close of the year in which the conduct might have occurred. But it also includes conduct at the time you're filing the RF1. So it's important when there's an investigation like this going on to be clear where the organization is in its reporting cycle, because you don't want to add to the problem by not properly reporting to the registry of financial issues. This doesn't necessarily cover all kinds of investigations, but the ones that are covered by the reporting requirement. And the other area where reporting sometimes has to be made during the course of the investigation is in connection with the independent CPA audit each year, because the auditors ask very specific questions, and they ask the lawyers to disclose very specific. And I think that's kind of beyond the scope of what we're talking about now. But the kind of the business lawyer for the organization will be thinking of those reports which are independent of what Aviva and Stephanie are investigating and reporting on. It's like, well, how material is this? How much of it do we have to disclose to the government, to the auditors? And you're right, Aviva, those are not privileged.
Right, exactly. One thing that we often think about is how to make sure that we document the diligence and how diligent the investigation was without putting too much substance that could then be problematic if it were in a written report. The number of interviewees, the functions that were interviewed, that kind of thing. We'll often think about how to create a summary document that demonstrates how much work went into it and how the number of conversations with the board committee, that kind of diligence that the organization undertook, making sure that is not lost and that goes in the file is really important. But I think we should hear from Stephanie on when she gets involved in kind of what a forensic accountant does and why it matters in these kinds of investigations.
So as Aviva alluded to earlier, twice this year, I've gotten a call from Aviva saying, hey, we've got a problem. It involves accounting. I don't know what to do. So again, as she said, there's roles for everyone. And the forensic accountant usually has a deep background in accounting and in that industry. And the reason you would bring a forensic accountant is because in these investigations, time is of the essence, right? And scoping is of the essence. And what a forensic accountant does is able to decide with the attorneys, how can we quickly get a handle on, is there smoke? Is there fire? Is there nothing? And like, how do we move forward in that? And for one investigation Aviva and I did, I was able as a sole person to take the data, run some analysis in Excel and quickly be able to say, well, you want to take this to the AG. I think there's enough here to show that we've got a case. And we're able to leverage up and down based on the significance of the data. As Aviva said, how many accounting records are we going to have to look at? Do we need to go to a payroll system? Is there a separate expenditure system? So, they'll look at it from the legal side. We will say, based on our subject matter expertise, and based on patterns of data, is something atypical? Does this look suspicious to us? And then we come to the table and determine next steps from there. One thing I will add is sometimes the question is, why bring in a forensic accountant? A company has its own accounting department. Can they do what we can do? And the answer is probably yes. I mean, to a certain extent, an organization's internal audit department or accounting department could do that. I think independence and objectivity always plays into, who is performing the work. And then we know most staff is already sort of full in their plates. And so a forensic accounting firm can come in and scale up and scale down an investigation fairly quickly, given that is what we do for a living.
Specialize in helicoptering. And one of the investigations that Stephanie referenced, it wouldn't have made sense to have the company's sort of line accountants do the work, even though they probably could have, because it was their department that was under some suspicion and the CFO's conduct was at issue. And so having the CFO's direct reports assist us in analyzing patterns would not have passed regulatory scrutiny, and certainly is far from a best practice. So I would say that is not uncommon, as well as the focus is on people who touch the books. And so it's just really not appropriate to have them also report out to counsel on that.
One other example I had is actually we got brought into an investigation with alleged CEO fraud, actual like physical theft of money. And it was soon clear in looking at the books and records, there were bigger problems than just the CEO theft. And so I think, as Aviva says, we, as a forensic accountant, we come in with an objective, but it doesn't mean we have blinders on, and we do keep alert and skeptical to what else we see. And it turned out that company ended up having to restate because there were enough accounting issues just in general with the way things were run. So I think that can happen too in leveraging an accountant.
Yeah, I think, and the reverse is true also, right? We've had cases where, let's say, a disgruntled employee brought a complaint, and
Sure.
The complaint kind of mushroomed into include some allegations of, let's say, an improper vendor relationship. And then we started an investigation and determined that there was no there. But sometimes it requires particular expertise to be able to say that, well, I looked at all of the expenses here, and they all check out and they tie out, and you actually don't have a problem, which is always kind of what we want. And it happens sometimes, but it doesn't happen all the time. So it's important to be able to kind of be nimble and figure out when you need to invest heavily in that, when you need to just take a kind of cursory look, and just thinking about the different levels of investigation that you could do is important.
And I think, going back to kind of keeping your eyes peeled on a recent investigation Aviva and I had, the board was like, well, you're going to already be interviewing these people. Maybe kick the tires a little bit too while you're there. And so I think from an accounting perspective, we're able to do that relatively quickly with not a ton of investment, just because there are, the top 10 questions I would ask about how books and records are kept, or what the internal controls look like. So there is that benefit as well.
And a lot of nonprofits, obviously some of them are huge and run like businesses and have systems and so forth. A lot of them reach a pretty substantial size in terms of employees and funding and programs, but they're still run on, like the original mom and pop.
Yeah.
The founders set it up. And so they don't always follow really robust practices. Once they've crossed over in California the $2 million a year threshold, the internal stuff gets a little bit more robust because they're subject to an audit. But below that level, it can be a pretty big organization with a lot going on, and really, they got into it for mission, not for profit. And so they didn't necessarily follow all the best practices. So sometimes it's quite an awakening to realize that there's other ways of doing things that would make it, not only make life easier, but then people wouldn't be suspicious and it'd be.
Agreed.
And
go ahead.
I was just going to say the same thing happens even for profit, right? You start out as a startup and all you care about is making money, and it makes sense, right? In the beginning, it's your mission that's important. But sometimes what happens is we wait a little too long, right? Yeah. And then that's where the problems come. So it really is about finding that balance between the upfront investment or the down the road investment. It's usually one or the other happens. So just weighing those.
Yeah, and we're almost getting ahead of ourselves. We have a whole slide on best practices and management. But Aviva, let's talk about the really scary case when it's not even the client's problem and it ends up costing them a lot of money.
Yeah, that's a very good intro. Thank you. I would say it's scary in one way, less scary in another way. It's scary because it's expensive and takes not just kind of money, but also man hours, and it's distracting. I would say it's kind of high cost from a resource perspective. But hopefully the nonprofit is not the subject of an investigation, or the target, I should say, of an investigation. And so it's really someone else's drama. And this is something that Cynthia and I have dealt with actually a fair amount over the last couple of years, in which nonprofit organizations, some small, some quite large, gets a subpoena. There's a few different types, just wanted to cover them. Grand jury, that's something that the government, that's a grand jury that the government has seated. It's a government investigation, and there may be evidence in the form of either documents or witness testimony that's relevant to the case that the government is trying to bring. And so a grand jury subpoena, all subpoenas are court orders, but a grand jury subpoena will either call for testimony or documents or both. And the same is true actually for a third party subpoena, which is sort of the quintessential getting involved in somebody else's drama, in which two entities or companies or people or any combination of those are in a dispute in litigation, and the nonprofit organization has relevant information, or one of the parties thinks that the organization has relevant information or documents. The third category I wanted to cover, civil investigative demands. Those are also from the government, not a criminal case, not a criminal investigation, I should say, but same principles apply, that there's information, usually emails, maybe some other types of documents that the organization has that are relevant to an investigation, a civil investigation that the government is running. So when you get one, what do you have to do? You have to comply, unfortunately. And usually the first thing to do is to negotiate. They always have dates on them, and the dates are very aggressive, and I would say almost never practical. And so you negotiate a time frame and hopefully a narrowing, because often actually, I guess always, a subpoena will tell you what the categories of documents that are sought are. And narrowing that either by date, by subject matter, by custodian, kind of any way you can slice off bits of what is being sought is helpful, because you want the smallest possible list of items or email boxes you need to search or people you need to talk to, that kind of thing. And then this is another situation in which the organization's document or IT function is just so critical, and making sure that there's a way to search through materials as efficiently as possible, because it's a huge undertaking. Often these subpoenas are very broad. They seek information for many years from many people, and being able to sift through usually the electronic records that the entity has is just really important. Unfortunately, recouping costs, there's like a number of cents per page. I should know it offhand. I don't know it offhand because so much of this is now electronic. I haven't dealt with much hard copy material in a subpoena in a long time, but there's a few cents per document that you can get back, copying costs. But I would say by and large, it's a very expensive endeavor, and a frustrating one at that. I don't know, anything else on that, Cynthia?
Well, it's the question there, that because the clients, at least mine, are well trained enough to send me one of these things when they get it, and they're like, well, okay, we'll just send them everything we have. And I'm like, no, wait. No, you have to talk to a lawyer first.
Yeah.
Because there's some stuff you can't disclose and some stuff you shouldn't. So can you talk a little bit about what you're looking for as a lawyer when the client they've collected all this data and they think it's responsive? What's the filter that you apply?
Sure. Well, I would say it's not so much a filter. What I would do is I kind of build sort of like a little plan. Who do we think might have relevant information, and where does that information live? Is it an email provider or what? Then the next question would be, so who are the lawyers or other professionals with whom there's a privilege of some kind, who those people interacted with, because we're going to need to make sure that any privileged material is pulled out of whatever is produced. And there is an opportunity to object to certain categories. So that is something you might also want to bake in. But a lot of it's really a strategic call of, without waiving any kind of privilege, how do we balance the need for compliance with the cost of complying, with the difficulty of kind of narrowing it as appropriate. And a lot of this, I would say, frankly, most people are pretty reasonable, and you can often shave off certain categories to make it a more manageable task. But I think turning over everything as a default is likely to also be, frankly, an expensive endeavor and could create some problems, especially if there's privileged information in there. So negotiating, I would try to negotiate your way through it is an important piece of it. I feel like we've thrown a lot at you, and it could feel like a moving target, especially because a lot of it is organization specific, issue specific, investigation specific, but there's some kind of overarching best practices that we thought it made sense to talk about. And it all kind of goes into making sure you have a playbook. Sort of assuming that at some point there's going to be an investigation that occurs. How can you prepare, and how can you have a playbook for when that happens? Go ahead.
Well, I was just going to say, anytime there's all these descriptions of policies, those are the things that as the business lawyer, we more and more often those are set up as part of the formation of nonprofits, because the IRS 990 now asks if the organization has a whistleblower policy. You frankly have to have a conflict of interest policy now to get an IRS determination letter. And it's also pretty common to see early questions about a document retention policy. The other thing that's not on here that it seems obvious that of course they'd have it, but they don't always, and that's an employee handbook, a personnel policy that says, how do you deal with grievances? What is the allowable kinds of behavior? Has the organization communicated the right, it communicated corporate ethos, a corporate ethics policy of wanting to be in compliance with all these various laws. So that comes back to the top of the slide, which is the board education point. And that is, sometimes we don't have an opportunity to have this conversation until the organization is investigated, and then you're backtracking after the fact and saying, how all this, it might not have gotten so bad. But for organizations that are, hopefully represented by some of our participants here, if these things aren't already in place, they can really go a long way to creating a culture of compliance, creating a culture of accountability, and making it more difficult. You can't prevent all fraud. I mean, people who deal with embezzlers know they can speak better to the kind of person. Nobody knowingly hires somebody that's that you can tell would steal from you. By definition, they're the kind of people that you like and that you don't suspect. But building a corporate culture and having checks and balances, having opportunities for people to raise issues, having a conflict of interest policy so that vendor relationships that have a related party or a board member involved, so that you can spot that up front, it just creates an environment that's not as hospitable for these bad acts.
Right.
I'm sure Stephanie and Aviva have thoughts on these policies as well.
The one policy that I would add is a a non-retaliation policy. I actually think, I'm not an expert in employment law, but I think you have to have one if you're an employer in California. And it, obviously be part of the other types of policies that we're talking about. And it helps certainly on the front end to create a culture of compliance, but it also can be important on the back end if you need to be able to point to a policy that is on the books that somebody may have violated. So I would say they're important preparatory measures. They're also important kind of backstops if you do find misconduct, especially if it's something that's a little bit more marginal, that it isn't, something very obvious theft, but something a little fuzzier, being able to say that, well, we have a policy, this is what it is, and this is why this conduct, is violative of it, is just critical. I just want to say a couple other things. On the board education front, one of the pieces of education is what Cynthia just talked about knowing that all these policies need to be in existence and kind of where they are, and that the organization has those in place. And then the other is kind of related to what we spoke about earlier, which is if a whistleblower complaint comes in, the board needs to be able to sort of pretty nimbly be able to set up a committee. And that committee needs to know that, they're going to first work on identifying investigation scope, and should give some thought to if there's other questions that they want the tires kicked on as the investigation is kicking up, and the kind of playbook for what that'll look like after it gets started. Also, the cadence with which the board committee wants to hear feedback. That's an important question that comes up. Are they going to want updates weekly, bi-weekly, whatever makes sense? It should just be part of the playbook.
Yeah, and it really shouldn't take 6 or 8 weeks to get the committee together. Aviva and I are laughing because we've seen that, but it's not that every organization needs to expect that they will have an investigation someday, but there needs to be sufficient attention to an operating organization that if it comes up, it's got to be a high priority and something that's set in motion, because delaying an investigation never leads to a better outcome. Is that too broad of a statement?
No, I think that's okay. I would go even broader. It almost always leads to a worse outcome.
Yeah. Stephanie, any final thoughts? And then we'll conclude the program and go on to Q&A.
I mean, I'm the accountant, so, internal controls is always something that comes up. And I was looking at this ACFE report, and for nonprofits specifically, a lack of internal controls, management review, or override of, internal controls are the primary risk points for fraud. And also tone at the top, what is the top of the organization saying? So many organizations are small. I mean, or, staffing is lean, no matter how big you are. And so the question is, how do you protect yourself, efficiently? And I think doing a risk assessment of your organization and figuring out what your greatest risk points are is the best way to scope that. Certain departments are going to have more risk than others. So like operations or accounting or executive management, start there. And then you may or may not have an internal audit department, but someone needs to be close to the books and the records and have an objective, view of what's going on. A lot of times things get away from people, and, reconciliations are there for a reason, and so I would say, if you're thinking about, what are the top 5 things you should be looking at? It's, have you done a formal risk assessment to really understand your vulnerabilities? Is management involved? Are people asking questions about, the internal controls, the account reconciliations? Are they involved in unusual transactions? And then another thing is surprise audits. I know it sounds, rudimentary, but it is something that, if you want to keep your people honest, to put it out there that we're a culture of compliance, and that is something that could be, a relatively minimal investment, but can keep people sort of always wondering, is someone going to be looking? I think the last thing is segregation of duties. And I know that the smaller an organization is, the more difficult that may be. But Aviva and I were on an investigation where the CFO basically could move any amount of money for any reason, and it went unchecked. And so thinking about some of the key risk points and where you can implement, a segregation of duties is a wise decision.
Yeah, or even just a checkpoint, you
Yeah.
drop the amount that one person can touch to, whatever makes sense within the organization's operating budget. But
Right.
yeah.
And I think the last thing that we've all touched about is, other employees are going to be your eyes and your ears. And so training them and making sure that the entire organization is up to speed about reporting mechanisms and what's acceptable behavior, and, to speak up if something does look or feel out of place.
So with that, Margaret, let's conclude the recording of the program at this point.